Last week's action was insane. What we have experienced in the last 4 months feels like years and years compressed into fast-paced action. It's a battlefield out there, and the stock market is feeling it, including your portfolio. The week of June 23rd to 27th of 2025 was a heart-pounding chapter in the stock market saga, where tech giants like Nvidia hit record highs, Middle East tensions kept oil prices on edge, and the Fed's next moves loom large. I'm the Stock Bro, your guide through this wild ride. Last week we saw Oracle soar and markets wobble as Israel-Iran fears flared. Now the plot thickens and you need to know what's next before you trade on Monday. Smash that subscribe button for weekly market analyses. It really helps a small channel like mine. And head to thestockbro.com for my exclusive stock analyses and insights before they hit YouTube. Let's dive into this week's tale of triumphs and turmoil. The story opens with cautious optimism. After last week's volatile close where the S&P 500 was down 0.22% and the Nasdaq off 51%, markets caught their breath. On Monday, June 23rd, hopes of easing Israel-Iran tensions, sparked by Trump's ceasefire announcement, set oil prices sliding to $70 a barrel. The S&P 500 climbed 0.5%, the Nasdaq gained 0.7%, and the Dow rose 0.3%. US-China trade talks progressed, with an agreement of rare earth shipments boosting sentiment. But this calm felt fragile. Last week's oil spike to $75 a barrel reminded us how fast things can shift. Tech stocks took center stage, and the drama was intense. Nvidia, after last week's 2% dip, roared back, rallying 9% week to date to a record high. Fueled by AI hype and strong data center demand, Microsoft joined the party, up 4% with new AI partnerships, while Oracle gave back some ground from their recent 14% surge, driven by 52% cloud growth to $3 billion. CoreWeave, the Nvidia backend cloud player, soared 45% this month post-IPO, with buzz around its bid for Core Scientific, a Bitcoin mining firm, signaling AI infrastructure's red-hot growth. But not every tech star shone. Apple lagged, up just 0.5% week to date, but down 19% year to date, missing the AI rally as Needham downgraded it, citing no iPhone replacement cycle until 2026. Tesla bucked the trend, jumping 8% Monday after its robotaxi rollout in Austin, though analysts warn of weakening fundamentals. AMD, last week's chip leader, cooled slightly but held gains on its MI350 GPU bus. Quantum stocks like Rigetti and D-Wave saw modest pullbacks, while Oklo surged 25% on news of powering an Air Force based on its nuclear reactor. The stock did, however, return most of its gains in the remainder of the week. And just when markets exhaled, geopolitics threw a curveball. Last week's Israel-Iran tension, which pushed oil to $75 a barrel, eased with Trump's ceasefire call over June 21st-22nd weekend. But by Wednesday, June 25th, U.S. embassy evacuations in Iraq and Iran risks sent oil back to $70.50. The VIX, down from last week's 20.8, ticked up to 18, signaling unease. Friday's close was mixed. The S&P 500 was up 0.3%, the Nasdaq was flat after a very volatile day, and the Dow was down 0.1% as Trump's sudden halt of Canada trade talks over digital taxes sparked tariff fears. The Israel-Iran saga remains our story's wildcard, and it's make or break for your portfolio. Last week we warned of oil hitting $80 to $90 in a simmering conflict, and here's how it could unfold. So, the best case scenario: the ceasefire holds, oil stabilizes at $65 to $70 a barrel, inflation stays at 2.5%, and tech rallies 5 to 7% as the Fed signals cuts. Nvidia and Microsoft could gain 10%, and QQQ jumps. Your portfolio is thriving. The worst case scenario, however, is the conflict escalates. Oil spikes to $95 a barrel and inflation hits 4%. Tech crashes 12 to 15%, Nvidia, Apple, Amazon, as supply chains falter. Energy and defense stocks like Exxon and RTX soar. Your tech-heavy portfolio could lose 25%, and you're in damage control. So what is the most probable scenario? Limited tensions persist. Oil hits $75 to $80 a barrel, and inflation creeps to 3%. Tech dips 3 to 5%, but QQQ holds. Energy outperforms, and your portfolio weathers the storm with diversification. The Federal Reserve kept market guessing. After last week's hawkish June 18th meeting, with rates at 4.25 to 4.5%, 2025 cuts projected, new data added intrigue. Thursday's jobless claims hit 247,000, above the 236,000 estimates, and Q1 unit labor costs rose 6.6%, signaling wage pressures. Core CPI rose to 0.1% in May, below the 0.2% expected, suggesting tariffs aren't yet spiking prices. But the Fed warned tariffs could force rates to hold, dimming cut hopes to 20% for July. This week's heroes shone bright. Nvidia and Microsoft led tech up 9% and 4%, while CoreWeave's AI infrastructure plays skyrocketed. Exxon and Shell gained 2 to 3% on oil volatility, and defense stocks like RTX rose 2%, echoing last week's safe haven strength. Oklo's 25% jump was a nuclear win. Apple, however, lagged, down 19% year to date, and Chewy tanked 10% after missing earnings. Airlines like Delta slipped on oil fears, and financials like Visa stayed weak. Last week's losers like Adobe persisted in the red. Next week is loaded with action. Tesla's Q2 delivery numbers drop on Wednesday. Weak sales could hit shares. Constellation Brands' earnings on Tuesday could sway consumer stocks. Friday's job report, expecting 110,000 new jobs and 4.3% unemployment, will shape Fed bets. Middle East risks linger. Oil above $80 a barrel could tank tech 5%. Subscribe now to catch my next video, and visit thestockbro.com for exclusive stock picks and insights before they go live. So that was the epic tale of June 23rd to 27th. Nvidia's highs, Apple's low, and a geopolitical storm brewing. Are you riding CoreWeave's AI wave or hedging with Exxon? Drop your strategy in the comments below. Smash that subscribe button, hit the bell, and head to thestockbro.com for premium stock analysis and market insights. Make sure to watch last week's video on screen right here to be fully caught up. Stay sharp, stack those gains, and I'll see you next week. And as always, happy investing.